If you happen to live in the States, then I'm sure that one way or another it's been beaten into your soul at this point that investing into a 401k is one of the best strategies to building long-term wealth. Unfortunately though, the word 401k is thrown around like Papa Powell throwing around stimulus money. So it's very rare that you actually come across somebody who truly understands what a 401k is in the first place. So understanding what a 401k is one of the most important parts about investing, which roughly 66% of Americans do not. But what we do have is some very interesting guesses as to what it might be. But in theory, if you were to start at 23 and you were to max out your 401k every year with an expected annual rate of 8%, you can expect to become a millionaire in about 20 years as early as 45 or a multi-millionaire as early as the age of 60. All that being said, in this video, we're going to be breaking down what a 401k is, why you should invest in it, and how it's going to make you a millionaire. And at the end, we're going to be talking about how much you should have invested in it for your particular age group. With all that being said, let's get right into it. The 401k is a part of the Internal Tax Revenue Code. This program was created to essentially incentivize people to invest in their retirement by providing them an account where they can park their money and to get certain tax benefits as well as write-off benefits. And these benefits are both for ourselves as well as the companies that we work for. The way it works is you set up a 401k account through your company, and once it's created, you decide on a specific percentage that you would like deducted from your paycheck on a bi-weekly or a monthly basis to fund your account. Now, there's two types of 401ks, the Roth and the traditional. With the traditional 401k, whatever money you have in that account, you can use to deduct off of your income. And both of these accounts have an annual limit of $22,500, so you can invest less, but not any more than that amount. So let's say that I were to make 100 grand a year and I had decided to allocate 10% of that into a traditional 401k. In that case, I would only have to pay taxes on $90,000 of that original $100,000 salary. And also on average, most people are contributing 13.8% of their income into their 401k. Now, this might all seem obvious too, but it wasn't always obvious for me, especially because you still have to decide on the exact investments that you want to make within that account. But you should still prioritize investing into this account because it's one of the only accounts in the world with a guaranteed return just because of the employer contribution match. Usually, your company will offer you a few specific mutual funds to choose from, and some of the most popular ones are the target retirement date funds. But what I would do is look for something with a low expense ratio, ideally something that starts with a 0.0 something. Then I'll look at something that tracks the broader market, something like an S&P 500 index. Now, assuming you've done everything that we talked about so far and you've offset your income by selecting a traditional 401k, the idea is that you continually do this from 20 to 40 years from now so you can retire a millionaire. For the moment you've all been waiting for, how much should you have invested in your 401k? You know, they say comparison is a thief of all happiness, and you should never do it. So here's exactly how much everyone else should have invested into their 401k by age, so you can compare yourself to them. According to latest data from Fidelity, the average 401k balance is $103,900. Now, if you don't have that, what are you even doing with your life? Sell your home, sell your car, sell your parents, and dump it all into your 401k. No, but seriously, averages don't really mean anything, and these figures are very misleading. Because if big boy Elon were to waddle his way into this room and it was just him and I, the average net worth in this room would be $100 billion. Yeah, now let me show you the real data because your mind is going to explode when you see the difference between average and median, which is the real average that we refer to when we talk about average. Check this out. If you're younger than 25, then the average 401k balance is a little over $6,000, but the median is $1,786. Huge difference. The next age bracket is from 35 to 44, and the average 401k balance is $97,000 here, but the median is only $36,000. And then we have 45 to 54, where the average 401k balance is $180,000, but the median is closer to $61,000. So that's how much the real average person has in their 401k, and according to data from 2019, 48% of Americans have no money saved up for retirement at all. And those who did had an average of $160,000 at retirement in their 401ks. And this may seem like a lot, but it only lasts the average couple a few years after retirement, especially if they're solely relying on their 401k. And that's because you should expect to spend anywhere between 55 to 80% of your current income in retirement. So if you're currently comfortable on $100,000, in a retirement, expect to spend anywhere between 80 to 55% of that, or $80,000 to $55,000 annually. Now the good news is that the older we get, we tend to spend less money. As you get older, you're also a lot less likely to spend ridiculous amounts of money on trips and dinners. And generally around retirement age, your home is most likely paid off, so you don't really worry about a mortgage payment for the most part. Now here's the blunt truth of how much you should actually have saved up in your 401k based on financial models and historical averages. It's generally advised that you have 1 times your annual income saved by the age of 33, 8 times by the age of 60, and by 67 you should have 10 times your annual income saved up in your 401k. Now I don't mean to stress all of you out about this, and by you I mean mostly me, but hopefully we still have a few decades ahead of us to increase our income and to reduce our costs as much as possible. Make sure to share this video with all of your friends, because if they also don't have enough money, then we can all be sad together. And that's a lot better than being sad all by ourselves. If you want to learn about more ways to increase your income, then go ahead and click right here. Thank you so much for watching. Make sure to drop a like, and as always, I'll see you guys next time.